Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine Economy Secretary Arsenio Balisacan is confident the Philippines is still on track to reach the upper middle income country status this year. Pantheon Macroeconomics tipping for the Bangko Sentral to cut rates by 50 basis points next month following dismal GDP results. We have analysis from its chief emerging Asia economist Miguel Chanco in the UK. And President Marcos underscores the importance of economic corridors to expand trade and investment as the Philippines takes over the chairship of the ASEAN Business Advisory Council. Despite weaker than forecast growth last year, the government says the Philippines remains on track to graduate to upper middle income country status this year. Economy Secretary Arsenio Balisacan said that even with 2025 growth at 4.4%, the country is still likely to meet the average income threshold. The Philippines has remained in the lower middle income bracket since 1987, despite its gross national income per capita reaching over $4,470 in 2024. That's just $26 shy of the World Bank's current cutoff for upper middle income status. GDP growth slowed to its weakest pace in 14 years, excluding the pandemic. The economy grew by just 4.4% in 2025, way below the government's revised 5.5% to 6.5% target. This is the slowest full-year expansion since 2011, though it contracted 9.5% in 2020 during the COVID crisis. Balisacan acknowledged the slowdown was steeper than forecast, but said it reflects reforms aimed at restoring trust and ensuring sustainable growth.
As the President mentioned, it cannot be business as usual because otherwise we may have growth this year or last year, maybe growth may be higher, but with corruption all over the places in infrastructure, that would not be expected to last. And so we would better have a slowdown, correct the problems, build the trust of our people in their institutions, in their government.
The Philippine Chamber of Commerce and Industry says it expects the economy to regain momentum in the first quarter after missing growth targets last year. PCCI President Ferdinand Ferrer said the 3% growth in the fourth quarter was an after effect of the corruption scandal, noting that the slowdown was expected as the government reduced or even halted public spending. He added GDP had been growing at around 5.5% before the scandal hit flood control and other major infrastructure projects. With this, Ferrer stressed that recovery is now imperative, calling for the corrective and preventive measures to ensure similar disruptions do not happen again. Meanwhile, Makati Business Club Executive Director Rafael Ongpin urged reforms in transparency, governance, and ease of doing business. He said passing key measures such as the Freedom of Information Bill, amendments to the bank secrecy law, and a more transparent budget process are critical to long-term economic growth. It's one bad quarter after another following the flood control scandal. Economists we've spoken with say it's a loss of momentum, piling pressure on the Bangko Sentral ng Pilipinas to ease further and on Malacanang to deliver cleaner, better targeted spending and reforms. One of Business World's regular economic poll respondents, Miguel Chanco, chief emerging Asia economist at Pantheon Macroeconomics, has been based in the UK since 2017. He had flagged ahead of time that fixed investment would get much worse before it gets better, and that public infrastructure scrutiny plus weak business plans would be central drags to Philippine economic growth following the flood control scandal. Now, he's tipping for the Bangko Sentral to cut rates by 50 basis points following dismal GDP results, which he describes as a hard landing. I spoke with Chanco from Newcastle upon Tyne in the UK following the release of the GDP results.
I was really surprised. I think that's the same for everyone, right? No one expected it to be this low at 3%. Maybe consensus was around high threes. We were around the low fours, but yeah, this was quite a shocking print. But I mean, if you look at the details, though, we were not quite surprised as to why the print was so weak. I mean, most of the downside versus Q3 came from a big drop in fixed investments, and that's really where the problem has been in the second half of last year, ever since this anti-corruption drive started sort of late September. So the details not so surprising. The headline damage certainly in terms of scale was. So I suspect that it's going to be another rough few quarters for the Philippine economy before it starts to stabilize, sort of second half of this year. But in general, yeah, quite a disappointing print.
Yeah, it's disappointing, shocking print, and you say a couple of weak quarters. So, what, in your view, then, is the single most important message that these numbers send about the state of the Philippine economy now?
Well, it's certainly not a good look, right? And it sort of justifies the market turmoil we saw late last year. I think what these numbers show, I would rephrase that. What these numbers sort of hide is an underlying weakness in the Philippine consumer, which has been a long-running story now over the last few years. Yes, investment has been weak the last few quarters, but if you look since we came out of the pandemic, we had that really strong growth rate in 2022, 23. But ever since then, there's been a huge slowdown in underlying economic growth because consumption in the Philippines has been weakening. And that bit of the detail today, consumption fell to under 4% for the first time in a long time. That sort of underlying weakness in the economy we expect to continue, even if we start to see the investment side start to stabilize over the next few quarters. Weak consumption, to be specific, will be the main story from our point of view this year, which will keep a lid on headline growth as it recovers.
Transmission of that, if consumption is weak, and I know that you've consistently flagged on the demand breakdown 3 weak spots, and one of them is households with fragile balance sheets. How does that transmit to the economy in terms of maybe non-performing loans or maybe even jobs down the line?
Well, I mean, most directly, it's just a lack of spending. I mean, so the reason why we've been highlighting this weakness in balance sheets is because of how severe the impact of the pandemic was in 2020, 2021, and the year after, the big increase in inflation globally, and not just in the Philippines. Essentially, during this period, household savings, according to our estimates at least, fell by around 15%, right? So that's quite a big hole when considering over the long stretch of history, this stock of savings tends to go up year on year. So a 15% decrease in those 3 years certainly has put the Philippine economy back, in our view at least, quite a few steps. So what we're seeing now, at least what we've seen since 2024, is that households are starting to rebuild these savings. Essentially, boosting savings means something else has to give, and that means spending. So households essentially aren't spending as much as they would normally if they had those savings in the bank as they try to rebuild these savings. Some of this drag or sort of headwind has been cushioned in recent years by more households borrowing, which is positive for short-term growth. But again, that just sort of compounds the problem long-term. Not only are we now in a situation where households still don't have as much in savings as they did before COVID, but they're also carrying much more debt at the moment. So this weakness in households' balance sheets overall, we think, will just constrain the ability of households to sort of ride to the rescue for the Philippine economy, at least in the foreseeable future.
Who's going to buoy the economy if it's not households, not consumers, even as fixed investment recovers? How much worse and for how much longer before we get better?
Oh, it's going to be a while. I mean, our forecast for this year, we're looking to downgrade it to the high fours. And it was only a few years ago when the government was targeting 6, 7, 8%. We're not going to go there anytime soon. We think definitely high fours this year in terms of growth prospects. Low fives next year. Again, very tepid relative to ambitions. It's an interesting question you asked there. Who's going to support the economy in this current stage? And we think there's very little options left, right? On the government side, the priority for the most part is still on the consolidation of the budget deficit from the pandemic, which has sort of fallen behind schedule, not just under this administration, even the previous one. So we expect government spending to still be quite constrained in the short run because of the need to lower the budget deficits. So it really falls into the central bank's hands, right? It's only really up to them in terms of macroeconomic policy leverage at the very least. It's rate cuts in the short term, well, more rate cuts. We're expecting. After today's print, it's going to be gospel that they're going to cut next month. I think at least over the past few weeks, and the word out of the central bank has been more iffy, especially after the last meeting saying that the cycle could be coming to an end. But after this weak Q4 GDP reading, certainly a February cut is almost a done deal from our perspective. I wouldn't be surprised if some push for a 50 basis point reduction. I remember the governor saying last year that only under a hard landing situation will we ever consider such a big rate cut. But at the moment, 3% growth for economy as undeveloped as the Philippines, so it has high growth potential. 3% growth is in the local context a hard landing, crisis period aside, GFC or COVID. So we wouldn't be surprised if they think about a 50 basis point cut at the next meeting, basically front loading, potentially another 25 basis point cut the meeting after. But certainly February cut's a done deal. Most of the support will come from monetary policy. And hopefully the external climate this year relative to last won't be as volatile. And that should at least help the economy, at least on the external export side, be on more solid footing. But again, that's another Pandora's box, right? We're talking about the uncertainty that comes with the U.S. administration and tariffs. So again, your guess is as good as mine on that front. But for the most part,
a guessing game for most economists I've been speaking with. But do you think this would mean job cuts? Could we be seeing some big job cuts down the line before the catch-up spending starts to take effect?
Yeah, most likely. I mean, that's probably the only aspect of Philippine economic data that has held up quite well. The unemployment rate is still relatively low. A lot of that, though, is being sort of flattered by the big rise in the size of the labor force over the last few years, which we perceive as reflecting a weakness in the economy. More people are having to enter the workforce because of lack of income, the savings hole that we spoke about a few minutes ago. But it tends to, for the most part, at least the unemployment rate specifically, tends to lag what's happening in the real economy. So over the next few quarters, at least definitely this year, I wouldn't be surprised to see that unemployment rate start to tick up, sort of in a delay to the slowdown that we saw in the economy, especially in the second half of last year.
Just as a final point, Miguel, where does this now place the Philippines in the League of Tables of Emerging Asia, which you monitor?
Well, quite low. I mean, it wasn't a long time ago when the Philippines was one of the darlings of the emerging Asia region, right? Alongside the likes of Vietnam, India, and the like. But now, we're back to being the sick man of Asia, unfortunately. At least if you look at us relative to the other demographic giants, so the Indonesias and your Indias, for example, where having this demographic dividend is still there as a structural tailwind. Relative to those countries, we're certainly lagging in terms of our current growth and likely future growth as well. So it's not a good look, not a good start to the year in terms of news. But I'm afraid the story is that it'll be a while before we get back on our feet again.
That was Miguel Chanco, Chief Emerging Asia Economist at Pantheon Macroeconomics, speaking to me from the UK. The Philippines will prioritize expanding trade and investments as it assumes chairship of the ASEAN Business Advisory Council. In a ceremonial turnover at Malacanang last night, incoming ASEAN-backed chair Joey Concepcion received the flag from AirAsia's CEO Tony Fernandez, who is representing ASEAN-backed Malaysia 2025 chair Nazir Razak. In one of his first public events since being diagnosed with diverticulitis, the president has given emphasis on bolstering trade ties within ASEAN and support the bloc's priorities.
Under the Philippine chairship, we place strong emphasis on building economic corridors that expand trade and investment, strengthen regional supply chains, and open doors of opportunity for businesses and communities across ASEAN. We note that the ASEAN Bank's priorities for this year empowering micro, small, and medium enterprises, workers, youth, and women, strengthening food security and agricultural productivity, advancing a digital and AI-enabled ASEAN, and boosting industry growth and regional integration across key sectors.
You're watching Money Talks. Coming up, the stock market plunged Thursday following the release of lower than forecast GDP figures. A check on the markets after the break. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang, checking in on the markets. Microsoft led yesterday's tech sell-off as it reported higher than forecast earnings on AI infrastructure. The Nasdaq dropped by 0.7%. S&P 500 slid by 0.1%, and the Dow rose by 0.1%. The benchmark 10-year Treasury yields ticked down to 4.226%. And gold prices notched another record at $5,318 per ounce. Analysts expect the precious metals rally to continue, supported by dollar weakness and geopolitical risk factors. U.S. futures are pointing to a decline when the markets open later tonight at Manila time. The Dow, the S&P, and the Nasdaq are all down by 0.25% each. As for Asian markets, they're rising this Friday as President Trump is set to announce his choice for the next Fed chair. South Korea's Kospi rises by over 1%. Australia's ASX 200 and Japan's Nikkei 225 advance by 0.25% each. And taking a look at our own markets on this final trading day of the month, PSEI opens this Friday higher by nearly 0.5%, 6,253. The stock market plunged by 132 points or 2% as investor sentiment weakened over lower than forecast GDP figures. The broader all-shares index slumped by 1.3%, with the local counters all in the red except for mining and oil. In a statement yesterday, PSE President Ramon Monzon said mid-cap and dividend yield indexes have outperformed the PSEI in the past 2 years despite market headwinds, while the mid-cap and dividend yield saw double-digit gains. PSE index tumbled by over 7% last year, making it the worst-performing stock market in the world, according to Bloomberg. As for the Philippine peso, it opens today a tad weaker, 58.98 to the dollar. The peso weakened by 20.5 centavos to close at 58.945 against the greenback. Subpar economic growth and the Fed's hawkish stance causing the depreciation. And the 10-year government bond yields ticked down to 6.011%. Corporate disclosures making headlines today on January 30th. Ayala Corp and UAE-based supermarket chain Spinneys are set to open 12 premium grocery stores across Metro Manila starting in the fourth quarter, with initial locations at Ayala Malls, UP Town Center, and San Antonio Plaza Arcade in Makati. The partnership marks Spinneys' first expansion outside the Gulf. Meanwhile, a unit of Global Ferronickel Holdings Inc. has shipped its first nickel ore cargo for 2026, with nearly 54,000 wet metric tons bound for China. The company is targeting at least 1.5 million WMT of production this year. And Concepcion Industrial Corp reported a 10.5% increase in fourth quarter group sales, driven by steady demand across its diversified portfolio. However, earnings declined due to cost pressures and industry headwinds. After 15 years with Sun Life of Canada, nearly 8 of them as chief executive in the Philippines, Benedict Sison is preparing to pass the baton. While he remains as strategic advisor and chairman, incoming CEO Jonathan J.J. Moreno steps in with continuity of purpose, people, and execution in focus. He formally takes over on April 1st. Here's Danny Laurel with both leaders, legacy, leadership, and what stays this moving forward.
You keep saying that this company is for the Filipinos, to make a difference in the lives of the Filipinos. How can you measure your impact on the lives of Filipinos?
Okay. One of the things we always want to do is not just be the leader in the insurance industry, but also be the leader not only in terms of market ranking, but also in terms of the impact or the contribution we make to our clients, helping Filipinos achieve lifetime financial security and live healthier lives, and the impact it makes on Filipinos. So I'm always inspired whenever I hear stories that have impacted the lives of Filipinos. I've heard this from one entrepreneur of ours whose husband passed away, and with the proceeds of that, she was able to establish a Japanese restaurant in Alabang.
Wow,
Yeah,
amazing.
so that's the impact of the proceeds. Their lives are even better than before.
It is a platform where I could help Filipinos. It's basically very much aligned with the values of Sun Life, achieve lifetime financial security, and live healthier lives. So the more effective I am in Sun Life, the more lives I touch, and the more lives I help.
And you're talking about your clients.
Yes.
What about impact on your employees? On 22,000, am I correct?
We have 22,000 advisors.
Strong advisors.
One of our best performing branch manager who heads one of the biggest branches that we have should tell this story about when she was in college. She can't even afford to buy one ulam, so she would share it with a friend, a classmate. Because of Sun Life, not only can she afford to buy meat, not only can she afford to treat herself to good dinner, meron na siyang bakahan.
Because I guess this is a job that a person can do. Any person can train for it. You know, you don't necessarily have to be a financial whiz or graduate to be part. Tell us about the company culture and your own personal values as a CEO. How was your leadership style and how do you want to be remembered?
When I was appointed CEO, I was this chief financial officer. When I was appointed at that time, and they thought I was ruthless. So many people were afraid. Sabi, oh my gosh, CFO, paano na lang kami sa marketing? Yung expenses namin ikakat, di ba? But you know what? You evolve, you transform. So that's what I like about this role, that I'm able to influence. And if I'm able, then I'm successful.
How can you keep having this mindset?
Since
what's the secret?
Since July 11 of 2020, this was during the pandemic. I've always reported to work every single day. People think that it's such a tough job, but you know what? It's not. It's not difficult because the people themselves are so driven, so determined to deliver on our purpose.
Danny, when I took on this role, I told my principals that this is not a job for me. This is a cause I have surrendered myself to. So I will really be working with my team to really make sure that we do not only lead, but we lead with purpose, right? Second is that I always focus on what endures. By focusing on what will endure, in this case, customer focus, taking care of our employees, enabling and motivating our workforce, making sure that we're financially sound. Focusing on what should stay, I think will ground me and get me to where we want to be as an organization.
What are your biggest challenges as you enter?
There will be a set of internal challenges, how to look at our processes, see if which of them we can actually improve on, see if it's going to be future-proof, how do we scale that. And there are going to be external challenges, some of which we have no control, right? geopolitical risk,
Okay.
climate risk, and all of those things.
How is AI going to change?
It is going to change
Disrupt?
everything,
Okay.
including life insurance.
Is it a threat to the fact that you have 22,000 people on the ground that are selling these directly to clients?
It is an opportunity, Dani. Imagine 22,000 of our advisors enabled by AI. That's going to be really a game changer.
What was your role in selecting your successor, and how confident are you, and what can you tell the people
The
about
selection of my successor started as far back as 2 years ago. Okay, talagang
Grabe.
dami. Then, finally, after a year, we were able to select. The one we selected is JJ. He went through a very rigorous process. Talaga interview. He was right. We were taking a risk on him, di ba? The background. But we knew. So, and we're very fortunate. That's why I said I feel so reassured, so confident about leaving Sun Life Philippines.
But you're not really leaving, di ba?
Yeah. You're correct. That's correct.
Tell us about those plans
So
after.
I will continue to be the chairman of the board of our Sun Life Holding Company, and I will continue to be the chairman of the board of our Sun Life Foundation. And at the same time, I've been hired as a consultant, as a strategic advisor to JJ. So just in case
Wow, talaga!
just in case he needs anything.
The mentorship continues.
As part of its continuing support for community livelihood initiatives, Alagang Kapatid invites the public to the Kapatid Bazaar 2026. The event will feature a wide selection of clothes, bags, accessories, and other items generously shared by TV5 anchors and artists, with proceeds benefiting Ikunanais, community-based mothers supported through sustainable livelihood programs. The Kapatid Bazaar 2026 will be held on February 3rd from 10 a.m. to 5 p.m. at the TV5 Launchpad, Reliance Corner, Sheridan Street, Mandaluyong City.
Monday and Tuesday, itong parating na Lunes at Martes. Yung Martes ay talagang open to the public, so they can come here sa Launchpad, Sheridan Corner, Reliance Streets sa Mandaluyong. And you can buy mga pre-loved ni Ses, ni Sean, over still open. And yung iba pang mga anchors natin from news.
And before we go, here's something new to check out in local cinemas. Now showing is Mercy, a futuristic thriller starring Chris Pratt and Rebecca Ferguson. Set in the near future, Pratt plays a detective accused of killing his wife, given just 90 minutes to prove his innocence before an advanced AI judge decides his fate. Let's take a look.
Detective Raven, I'm Judge Maddox, and this is the Mercy Capital Court.
Hold on, just wait a second.
You're before this court today charged with the murder of your wife.
I loved my wife. I didn't hurt her.
If you are innocent, prove it.
And good news for LEGO fans, Brickman Wonders of the World is staying longer. The globally acclaimed exhibition has been extended until March 8 from February 8. You can catch it at the Space in Solaire Resort. And that is it for Money Talks. I'm Cathy Yang. Catch us again Monday, 9:30 a.m. Kapatid, we are one news, all sides, all the time. Have a great day ahead.